An EV powered by one of these batteries would it would be night and day compared to your average lithium battery pack. It would charge in a minute or less, so faster than you can pump gasoline. It'll last thousands of discharge cycles, and it'll have something like 2 to 3 times the charge capacity. So we're talking about a battery that will last more than 1 million miles. It'll likely outlast every other key component of the car. So
Sure, I was going to say at that point, does it even really matter?
No, it's. I mean, you'll run your Tesla into the ground. The battery will still likely be resellable if everything that they promise,
Yep.
Comes to fruition.
Welcome to the Angel Research Podcast. We're here as usual today to discuss the market's hottest stock stories and investment opportunities. We've got Mr. Alex Koyfman with us today. Alex is the founder and investment director of the weekly market advisory service, Microcap Insider. And we're going to talk about some of his favorite investment opportunities in that space, as well as the topic of investing in private placements.
All right.
Usual disclaimer, nothing that we say here today is personal financial advice. Like, comment, subscribe, join the Discord in the link below. Muno, remember the link this time. Koyfman, welcome to the show.
Thanks for having me.
You want to give us a quick rundown of who you are, what your services are all about?
Okay. Well, you already know my name. So the services are generally aimed at small development stage companies, either public or private. And we like to focus on new emerging technologies, anything that's foreseen in the next 10 years is to be part of some emerging trend. So we have batteries, we have electric motors. It's primarily technological in nature. We don't do too many mining stocks or anything like that, even though there are plenty that are Vancouver-based. But it's emerging technological trends, I would say, is the quickest way to summarize that.
And you run Microcap Insider. That's where you're talking about like publicly traded stocks, right?
Correct.
And then are you still running First Call?
Yes.
Okay. And what First
Does that
Call
every week.
First Call is specifically for private placements. So.
Right. And so private placements, just a quick rundown of that. That's usually for high net worth investors, people who qualify as accredited investors, which means you need to either have $1 million liquid net worth, or you need to be making either $250,000 a year, or no, it's $200,000 a year if you're single, $300,000 a year if you're married for the previous 2 years. So these are much higher risk, much higher reward kind of plays. You do paperwork, you send a wire transfer, and then you wait for between 6 months and a couple of years, and then hopefully the stock goes public, becomes liquid, and then you sell out. So that's the idea behind that. That's the smart money.
How have private placements been doing lately, or at least I guess maybe what's the deal flow been like? I know that you kind of mentioned that.
Yeah,
things have
deal
slowed.
flow has been kind of weak. I would say over the last probably 6 to 8 months, ever since the end of last summer, it's definitely dropped off. I've seen some activity in oil and gas, and I've seen some activity in biotech. I think both of those, to a certain extent, are kind of recession-proof.
Yeah,
but
that makes sense.
Yeah, but the most common types of deals prior to that were resource deals. Again, going back to the Vancouver mining companies, those used to be a dime a dozen, and those have, at least for me, they pretty much dropped off the radar entirely. I think what's going on is companies are waiting for a better time to essentially get ready to go public. They want to go public at a higher valuation, so they're trying to wait out this cold period in the economy so that investors cash out more.
How do you differentiate between the snaky, sleazy Vancouver guys and the ones that are legit?
Well, for me, this has been like a decade and a half journey already. So for me, the differentiation at this point is pretty simple. I just stay away from the mining stocks.
Yeah.
Mining stocks it's at best, you can judge by the reputation of the people involved, and of course, many of them are legit. But there's often very little infrastructure and very little actual assets that you can evaluate on an objective level. With technological companies, there are patents, there are production facilities, there are employees. It's not just paperwork and geological reports. So I just kind of broad stroke and stay away from the stuff that I have little understanding of and where there's a lot of pitfalls like that.
Are there any private placements that you're like specifically interested in right now?
Right now, I would say me personally, I'm very interested in biotech stuff. Mm-hmm. And the reason is I think that we're kind of approaching somewhat of a technological singularity with biotech specifically. I think that we're going to have an explosion of new technologies and new opportunities in the next 5 to 10 years. And I think we're just kind of starting to enter that pattern. And for me, this obviously is the best time to get in. It's before it actually begins.
Do you know anything about like AI drug development or anything like that?
I've heard a little bit about that, and that obviously is incredibly exciting. I don't know what the viability is. I'm not a chemical engineer, unfortunately, and I can't say for sure what it is or where it's going to go. But based on the progression of the technology in other sectors, I think that computer-aided medical development is for sure going to be huge. In the next 10 to 15 years, you're probably going to see just quantum leaps in all sorts of sides of that market.
Yeah, it's pretty interesting on the development side and also just even the diagnostic side. I know that there's a lot of kind of programs out there that are outperforming medical doctors,
right.
trained professionals.
But medical doctors that work in certain fields, they draw from their education, their experience, and the data sets. And when you have a computer that can, take into account 1,000 times the volume of data, it's kind of hard to compete, right? So, I think that's probably where we're headed. And based on my recent experiences in the medical industry, I'm kind of all for that, And
Because you feel like people are incompetent often, or?
So I come from a family of doctors. Both of my parents were medical doctors, and so obviously I have bias towards the field. But I think that the practice of intuitive, wisdom-driven medicine is kind of ending.
Yep.
I mean, we took our 18-month-old for his regular checkup yesterday, and it was basically I was talking to a chart generator. The doctor just looks at charts, looks at answers to questions that I gave, and makes a determination based on algorithms already. So why even bother having the middleman there?
Yeah, I had some nerve issue like a couple of years ago, and I went and I kind of just like Wikipedia, I Googled what it could possibly be, and I just went and all the doctor was there to do was confirm and write the prescription.
Sure,
so.
and I've been there before, and it's kind of sad. It's kind of sad. In the days that I used to follow my dad around the hospital when he was doing his rounds, it really was an art form, And an art form is obviously it's imprecise a lot of the time, but when there's something about human intuition in practice that did make it a viable profession. And I think that they're really, really moving away from that and into the sort of the mechanized version of that. So I don't know. Maybe Google will be the best doctor in the.
They're just going to stick us in like a machine one day, and it's going to draw our blood, take some samples, and
sure, and do surgery on you too.
Yeah.
If it works, it works.
It's scary, but also exciting.
What's scary about it?
I don't know.
Like live longer?
Yeah, I don't know. I guess it's interesting because I think that medical malpractice is actually by humans is a huge cause of death.
Sure.
But for some reason, it's like naturally I would trust a human more than I would trust a machine
all of those,
doing it all.
The malpractice data, and again, this comes from decades of living around doctors and kind of dealing with the specter of malpractice. Yes, a lot of people die due to physician and hospital mistakes. How many people would die if those services weren't available at all?
Yeah, that's true.
you have to kind of take it with a grain of salt. Every time you enter the hospital, there's a risk of infection. A certain number of surgeries, no matter how well it goes, will end in life-threatening infection. It just happens. And I don't know if computers or robots are ever going to cure that problem, but if they become precise down to the molecular level, then maybe they'll minimize it. So, looking forward to it. I don't think the human element will ever leave. Just like you were talking about the chat program earlier, you still need to prompt the computer to do something. And maybe the art form will be in the prompting.
So it will be, definitely. I know that prompt engineer is becoming a pretty big, in-demand job out there right now.
Yeah, which itself is I think I'm a pretty good prompt engineer already, and all I've done.
I think there's a little more to it than just communicating with it, but yeah, I feel like I'm pretty skilled at it as well, and you've put out some pretty hilarious.
Poems and songs and sonnets that I've written.
But just to bring it for everyone that's watching in the loop, we were talking about ChatGPT.
Right.
Maybe I feel like that deserves like a full-on podcast discussion for another day.
Yeah, we probably shouldn't go too deep into it.
So I just want to move on from we started talking about the private markets and private placements. I want to move on to the public markets and some investment opportunities that you've been talking about there. We'll start with Tesla. Or, I guess it's a related investment opportunity with Tesla. So you kind of have been writing about the company's stock rally since the start of the year, but you're kind of I feel like you've been questioning whether or not it's sustainable, whether or not it is sustainable, and you think that there are kind of headwinds that Tesla is facing that opens up opportunity for another.
Yes, there are many headwinds. As far as the sustainability, so at the turn of the new year, Tesla was trading at a multi-year low, right, or something like that. It was close to $100. So it's doubled since then, and then pulled back a little bit. I just looking at this thing objectively. I mean, Tesla produces 1.37 million cars per year. Toyota produces 10.5 million cars, and Toyota is 1/3 the size of Tesla. Toyota out-revenues Tesla by factor 3 and out-profits Tesla on top of that, and still the valuation is and this is after they've dropped half of their market capitalization.
Yeah.
So how is that? I don't understand how that's sustainable. I just don't get it. And I think that this may flow into a later topic that we're going to touch on. It's just, it's trading by emotion and trading by trend. I think that's what's carrying it. They have an incredibly popular front man who, I don't even know what he does for a living anymore.
I feel like he's losing popularity, or he's like...
Yeah, I mean, the people are getting sick of him, I think, is the bottom line. I mean, I don't know what kind of mindset he's in, because he's on a godlike level compared to the rest of us, but he was probably their most valuable asset. And then, he's managing Twitter. SpaceX, I think, is probably his passion project, and he's still a CEO of Tesla. And I just don't get it. Why is it 3 times bigger than the next biggest car company in the world that's making arguably better cars at 8 times the pace?
Yeah, I think people will argue that there is some sort of grand plan for Tesla, and they're combined. They're not really a car company; they're just a battery company.
But they're buying batteries from the Chinese.
Yeah, I'm not saying it's a legitimate argument. I think that is, people think that he's going to combine the solar and the home batteries, but those aspects of the business have been around for a decade at this point, and they don't contribute anything substantial. So at the end of the day, I think you and I probably agree on this. Tesla is just a car company that shouldn't be valued at the price that it is valued.
I mean, it's hopes and dreams, I guess. It's powered by hopes and dreams. And like I was saying earlier, I guess I'm already part of the generation that doesn't really invest like that anymore. I have no fear of missing out on Tesla. I'm not attached to their products. I'm not a huge fan of their lead singer, and I don't get where the value is. But if you had bought it $200 a couple of years back, you would have doubled your money before it fell. So maybe I don't know anything.
I think you know a few things.
Maybe.
One thing you've been writing about lately has been the lithium fires. Mm-hmm. Can you expand on that, and then maybe kind of talk about alternatives to lithium batteries?
Okay, so yeah, lithium battery fires, that is a thing. Airlines have been limiting how many fully charged batteries you can take on board. I don't actually think you can take any fully charged batteries that aren't attached to, like plugged into a device on board an airplane anymore. And so clearly there's an issue. Clearly they have identified a risk. There's on average one lithium battery fire in New York per week. And it's mostly from e-bikes. The reason it's mostly from e-bikes is because they use relatively large, often recycled batteries. And when they're recycled in unregulated ways, you get failures, and the failure usually results in a fire. The lithium battery itself is just by design predisposed to catching fire. It contains a liquid organic compound solvent as part of its electrolyte. I'm saying all these words. I don't entirely know what these things do, but the point is it's high concentration of oxygen and high concentration of organic solvent. And then if you introduce high temperature, it's basically a time bomb waiting to go off. And so this happens usually when the battery's older and the cells start to fail. If you notice, if you've had the same phone for more than a couple of years, it tends to get really hot when you charge it. So that's kind of the process right there. It's the way that lithium-ion batteries are built today. Those fires are not. If we continue building them the way that we are, the fires are going to remain an issue. How often does it happen? It's not too often. It's a relatively negligible problem, I think, in the long run. I mean, New York City, with these e-bikes, even if every fire in New York was caused by an e-bike, there are 25,000 of them in the city. And so, it's 50 per year.
Sure.
And so it's not a huge risk. But the point is, lithium-ion batteries are unstable. They don't have very long lives. It's only a couple of hundred charge-discharge cycles before they start to lose performance substantially. Lithium is hard to source. It's politically troublesome. We usually have to buy it from countries that aren't super friendly with us, namely the Chinese again. And so there are just a lot of issues with that moving forward. It was a great thing when 30 years ago when the rechargeable battery revolution began. It was awesome for Sony back in 1991 when they released the first commercially available lithium-ion battery. But 30 years have gone by, and this is the 21st century, and we don't have a replacement that's pushing it out of the market yet. So yes, probably something needs to be done, and it needs to be a quantum leap over what we already have. So it needs to charge faster. It needs to be more stable. It needs to have a longer lifespan, and it needs to hold more charge. And so one of the things that I've been writing about is graphene-ion batteries. And graphene-ion batteries, they don't have any of these shortcomings that lithium does. They have actually, in testing, they've been shot at by rifles and still continue to put out charge, whereas a lithium battery would probably just explode if you did that. So graphene, in my mind, is a very, very high potential successor. Whether or not it happens, we'll see, because it's going to require a lot of investment, probably hundreds of billions of dollars from multiple sources. And in the modern corporate world, they usually take the cheapest, quickest way out. And so I don't know if it's going to happen, but there are companies out there attempting it. So.
Okay. Yeah, let's talk about that in terms of scalability, because I've been hearing about graphene for years, and I think most people who understand, graphene, they understand that it is kind of this super material that would outperform lithium in so many different respects, but can we actually produce it at a scale that is economically viable? And then maybe, what are these companies doing that could potentially change that could potentially get us to that point?
So the answer would have been no, just up until a couple of years ago. It wouldn't have been economically viable. The cost of graphene production just in the middle of the last decade was something like $3,200 per ounce. So we're talking twice the cost of gold. And it just prices itself out of the market. But there is a company in Australia right now that's producing very high quality lithium a very high quality graphene using nothing but natural gas and electricity. They do it completely in-house, and it's orders of magnitude cheaper. And they actually are producing the first graphene-ion batteries right now. They're producing commercial versions of it already, and they're sending it out to potential corporate clients. for testing and evaluation. And if it works out, hopefully they will get contracts from major consumer brands, and you're going to start seeing them in phones. You're going to start seeing them in household devices. Eventually, the holy grail would be EVs. And an EV powered by one of these batteries would just, it would be night and day compared to your average lithium battery pack. It would charge in a minute or less, so faster than you can pump gasoline. It'll last thousands of discharge cycles, and it'll have something like 2 to 3 times the charge capacity. So we're talking about a battery that will last more than 1 million miles. It'll likely outlast every other key component of the car. So
Sure, I was going to say at that point, does it even really matter? Like,
no, it's. I mean, you'll run your Tesla into the ground. The battery will still likely be resellable if everything that they promise,
yep.
Comes to fruition.
Okay, while we're on the topic of fuel sources, what about ammonia?
Ammonia. Okay, so that's right now. Green ammonia as a fuel source is being seriously considered by the heavy shipping industry as a replacement for for marine diesel, which has been the standard for probably 100 years now. And so it's a zero carbon footprint. The only emissions are water vapor and a little bit of nitrogen. And with the new ammonia production process that has recently been introduced by a couple of companies, they can actually make this fuel on board the ship using nothing but water, air, and electricity. So they can produce the fuel, then they can feed it into an engine that's not much different from the engine they already have running on diesel. And then that engine charges batteries, and it usually runs off of an electric motor anyway. So they can produce the fuel on board. If they produce too much fuel, they can turn it back into electricity just using a generator. So that is kind of a test market for the technology. If it's widely adopted, potentially, pie in the sky type of thing, you could have cars running off this thing. And so, ammonia is it's clean in production and it's clean in usage. There's almost zero carbon footprint at every step of the way. So it's a potential, I think it's a potential competitor to the EV industry.
Okay, and do you have any investment opportunities that you're eyeing in this space, or?
Yeah, we do. Microcap Insider is following one right now.
Okay.
So if you want to learn more about that, you can.
Okay, well, what do they, you want to tell us a little bit, just give us a little bit. What do they do? Do they produce the actual ammonia, or do they produce the technology that allows you to?
They produce ammonia production units.
Okay.
Which are, it's like half the size of your average refrigerator. They're stackable, scalable, and, their idea is, if you're a farmer, for example, you can completely live off the grid because you can produce fuel for everything on your farm, and you don't have to depend at all on on any other fuel source. And again, you can turn this stuff into electricity if need be. So it can actually act like a liquid battery if you've overproduced. And so, yeah, it's very versatile. It's clean. It's overlooked. Ammonia as a fuel is not a new idea. They used it during World War II in Belgium. They used it to power city buses because diesel was just not available. So it's not new. It's powered NASA rocket planes. The X-15 was an ammonia-powered aircraft, broke multiple records. So this is one of those situations where the industry has probably suppressed this technology for decades.
Sure.
And nobody really cared. We were fine. We were happy with our high-octane, relatively cheap fuel. So everything's changing now.
All right. You recently told me that the market is a mass psychology experiment. And I was going to ask you to elaborate, but I wanted to save it for the podcast.
I think that's kind of, it's obviously, that's a throwaway statement. It's true. It is a mass psychology experiment. The market goes from manic to panic and back again in the space of a day these days, just based on headlines. Now, what's different today? I think the influx of the new generation of investors is what's really making it, mostly an emotional affair. You have, again, I'm going to sound old, but you have these, young Zoomer investors who they want it and they want it today. They want to be invested. They see stock going up, they want to buy. their entire perception of investing was built largely around meme stocks, crypto, and fear of missing out. And so none of those really, they don't make sense to the old school sort of value investors like Warren Buffett, who they analyze everything down to the last nail. They don't do that anymore. It's all trend, and when the trend is sell, you get the bottom dropping out. And so I think that this generation, like every other generation before it, will age. They will get wiser and more patient. And then, of course, the next generation will come around and they're going to have their investment apps and they're going to have their meme stocks. And it's going to be a wild ride, I think. I think in the end, the cool-headed investor who buys and then forgets that they own the asset will probably win out. That's just the way of nature.
I was going to say, is there maybe some opportunity in this mania-driven investing style that we're seeing? Because to me, that's where there is profit opportunity in the market, is when you have people mispricing things because of their emotional state.
Sure.
And if you can be that steady person who's kind of looking from the outside and viewing the market from a psychological perspective, then you could
it's
take
pretty
advantage
easy.
of those
I think it's pretty
opportunities.
easy to find those opportunities. I mean, we can go back to Tesla as the biggest example.
Yep.
It was clearly oversold when it hit $100. I know a lot of people who were itching to pull the trigger at $100, and maybe they did. And it's overpriced at $400. At $100, it was probably oversold, and it was probably oversold by fanboy investors. And so, yes, the opportunity is to wait for the bottom and buy in. That would be my approach, or just stay away from meme stocks entirely. So,
All right. Anything you're looking forward to for the rest of the year, investing wise, or anything that kind of scares the crap out of you?
Well, the unstable interest rates kind of scare the crap out of me because that has a ripple effect through the market. What am I looking for personally? I'm looking for the IPO market to come back. Companies are IPOing at a much lower rate than they were last year and the year before. So I'm looking for that to return. I'm looking for more private equity deal flow. I think to me that would be a sign that, the smart money at the very least has calmed down and is ready to get back in. So I would probably look at those as my main compass.
Okay. And any parting advice for our viewers?
Subscribe to Microcap Insider and First Call.
All right. Alex, good talking to you.
Thank you. Good talking to you.
Everyone, like, comment, subscribe, and join the Discord, and we'll see you in there. You're in the Discord, right?
Of course.
Yeah. All right. Cool. You can chat with Alex in the Discord. Click the link. Peace. Oh.